The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your host. And of course, it doesn't matter where you're at or where you're traveling to, as long as you're here at this time. Everything went haywire here. Hang on. Let's get this fixed. I did an update on Windows, and I forgot to go back and check all my settings. So we shall see. Okay, that one's there. So let's save that. Let's double check these settings here in line. Okay. We should be good now. And it doesn't matter where you're at as long as you're here. There we go.
The following takes place between 2 p.m. and 3 p.m.
So we've got a day where the market's about flat, and that's exactly what I was looking for today. We got a couple of emails, so we'll answer those about my newsletter this morning, or we'll get into it. But for the most part, a few things. One, there were a lot of things saying that we'd be flat today, but it's very rare not to have a lot of action before a 3-day weekend or a long vacation, and then have the day before you go into it be rather flat. So, one, it happens a great deal. Two, options were telling me already for Friday that they were going to circle the wagons a bit. Now, some of the other stuff happens. Normally, cash from the Fed starts coming in on Thursday morning. Sometimes they push it Wednesday night. But we don't have no Thursday this week. We don't have no stinking Thursday. So I was looking for that cash to come in today a bit. Probably see that we get a bit on Friday, too. I suspect many will sell into it as they have over the last few days. The scenario I'm looking at now, which means what do we need to be thinking about, is whether or not this sell-off was just a little bit of market indigestion on some tax selling, or if we have something bigger coming on. Of course, the Fed has said that it's going to start tapering, and is this the first inning or two of a taper tantrum as we've had in the past? So I'm going to also show you probably one of the most important charts you'll ever see from the stock market, because it has happened over and over in markets from back, I'm going to say, 5,000 years recorded history. I've read some the way the markets have actually run, and we're off 4 points on the S&P cash. Not a lot happening. I suspect that we'll end up being flat here again today, even if we have a little bit of sell-off on the Fed notes. I didn't look at them, and I don't have the TV on, so I don't see them. But we shall see. But for the most part, look for light volume. A lot of people don't like to go short into a long weekend. Maybe as many people worrying about going long into one. We don't have a lot of shorts in the market, so I'm not looking for a lot of higher prices. Any higher prices should be fairly muted without all those shorts to cover on the way back up. Anyway, we'll look at some. Of course, it wasn't much of a earnings season last night. When we look at Autodesk off 17%, Gap stores off 23%, and Nordstrom's off 29% as we start the show. Not a surprise, as we've talked about it. I've been wondering how long it's going to take for the market to catch up to all the problems that we've had on the docks. I talked about how in the past, how remnants of a Reminiscence of a Stock Operator has been probably one of the most influential books of all time for the stock market and for me and Jesse Livermore. But he talks about the big earthquake of 1906 or 7 in San Francisco, and how it took a little while for the market to actually figure out that there were going to be some big problems following that. I have a feeling a lot of people are just thinking, or whistling past the graveyard over the last month, thinking that all the retail sales numbers are just going to be okay. But they've been far worse than that. And, of course, the discussion is that things aren't getting any better. I think we said about 7 days ago that the delay on offloading ships at the port of Long Beach, I should remember that because I spent about 8 weeks out there on the Queen Mary with one of my customers, living on the ship. That was kind of neat back then. I think Disney owned it at the time. Kind of creepy, really nice. They used to have a great bar on the top where I got kind of used to drinking Guinness. I'm trying to remember what they called it. I think they called it the who was the prime minister during the war? Churchill. I think they called it the Churchill bar. Anyway, ended up spending 8 weeks on there working with my customers as they had a big movie and a big ship that they were busy repeatedly sinking next door. But all the special effects guys were working in the convention center, which used to be the dining room of the place. And they had all the machines set up and all the stuff that I designed and worked on and sweated over. So they were one of our customers, and I just mostly just hung around if they ran into any problems, make sure and get them fixed and do some other stuff. But that's about it. Anyway, my thoughts go back to that passage in Reminiscence of Stock Operator on just how long it takes for everything to kind of catch up. Well, they must not have been pretty good. We're down 9 on the S&P, but 9 points is kind of a rounding error, isn't it? Yes, my boss came out, who was already 75 at the time. He was a big spender. I've always been a spendthrift. But he flipped $100 for each of us to the guy that had the spruce goose sitting there. Not the guy, one of the guys that worked there. And they took us all over, including up into the tail and everything else. So that was pretty good. I probably wouldn't have spent $100, but I was glad that he did it. Anyway, that's one thing. But we have a few other things. We'll get to them. But as I said, I probably have the most important chart of a trader understanding long-term regimes in the marketplace. And we'll get to that today. But we'll see. My guess, again, is that we probably close flat on the day on the S&P, as most times. But it looks the longer that this goes on, probably getting close. I have a few more questions to answer, and we'll be back in a few.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month, and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Well, we're back to down 1 point in the S&P cash. No mystery there. But we'll talk a lot about it. Let's do a little history, and then we'll get into the chart, which I think on a day where a lot of people are going to take a bunch of days off from the market, the big guys have probably already left, leaving the B team on Wall Street. Not a lot happens on that. But let's do a little history, and then we'll move on.
The following takes place between 2 p.m. and 3 p.m.
So what do we have? I played that already. I need to do history.
And it's all just a little bit of history repeating.
On this day in 1998, AOL, that's American Online for you folks that live in Lutz, Florida, announces it will buy Netscape Communications in a stock-for-stock deal worth approximately $4.2 billion. At the time, it was considered a move by AOL and Netscape to merge forces to better compete with Microsoft in the browser and internet provider markets. However, Microsoft's dominance and also its almost inability to install other browsers made the market almost stop them in their tracks. The Netscape browser lost almost all market share to Internet Explorer. 2003, Microsoft finally settled a monopoly lawsuit with AOL, then merged with Time Warner in another egregious and insane idea for $750 million over the loss of value in Netscape, although it probably should have been more like $10 billion. But AOL itself, once a dominant internet service provider, slowly lost their subscriber base. With the evolution of broadband internet in the 2000s, operates primarily as a media conglomerate today. But of course, even in 2013, which is the last time I remember them actually ever saying how many people still subscribe to AOL, was 2 million people after a high of about 100 million. People in the late 90s. And of course, who could ever forget all those CDs? Landfills from coast to coast, from sea to shining sea, filled with those CDs. Man, I even rhymed that. I'm pretty good at it. Okay. Yeah. Yeah, I don't know about the right. Raising rates now? I think it's probably right. Probably put a damper on an overheated market. I didn't know. I'm a poet and didn't know it. Anyway, on this day in 1998, we had that. Now, the most important chart of all time. And it's to let you know where you are in the regime of the markets, because this has gone back. I'm trying to remember the guy that did this. Is like John Philippe Cousteau or something his name is. He's a French dude. And why he didn't do much in the stock market, he did kind of veer into this. It's on some kind of transportation website. I'm not exactly sure, but it's been around for a while, forever. I'll try to remember the guy's name, and I'll be able to look it up. I knew where to find the chart because I've saved it forever. But he talks about basically the way that markets work over time. And over time, you're going to have, if you're going to accept the mean for returns in the market, you can sit on it. And that's what, to a great extent, Buffett has done, except he does one other thing, and that is that he buys so many shares that he is the market on a stock and he sets it. If anybody actually went to sell all those shares, I'm wondering what they'd actually be worth. But this gentleman, I'm trying to remember his name, what his name is, like Jean-Luc Picard or something. It's French. Came up with the series of the market where it starts off in the stealth phase. There's an awareness phase. There's a mania phase, which we've gone through for a fairly long time. That has enthusiasm, greed, and delusion. You come off the top generally fairly quickly with a bit of denial. Then there's the bull trap. And, of course, everybody believes everything's going back to normal. Then you have fear, capitulation, and despair, which finally comes back down under the long-term mean of the growth of companies and the world. And you return to the mean, and the whole thing starts all over again. So the question I'm saying is we've had our first really good sell-off in a while. It didn't instantly go back up to the highs. We've had a couple of double attempts at the highs. So why I said last Friday that Sunday night Monday was going to be probably the most important thing that we'd seen in a while. Next week brings up fund buying about mid next week. So if people continue to sell into that, because of course any tax selling for the big guys of Wall Street will be over the first day of fund buying next Wednesday. The question is, does everybody just continue to pile in Microsoft and Apple and drive the actual indexes higher and everything else continue to sell? People asked yesterday if I'd be long anything. I think it was XOP or some of these other ones. I really am not a big fan of being long other than intraday day trading, which kind of comes back into another question from a new subscriber about what he could do with my suggestion this morning that the market was going to end up flat. Well, as I did, buy the dip and sell the rip and get out of it while you still can, and make sure that you sell early and sell often. As I said, especially now, sell when you can, not when you have to. So there's part of that. Now, the question is, are we in a bull trap on a return to normal? I think you can make arguments on both sides of that, but my argument will not have any truth. Or as, what was the name of that movie? I'm trying to remember now. But it had Chief Dan George. He came out, was it Pale Rider? Can't remember if it was Pale Rider or something else. It was one of those movies. Where he came out and talked about words on paper mean nothing. Only the words of man that you can believe are steel. Hey, man, it was, I'll think of it in a minute. Well, I'm wondering if that isn't the bear trap. Like I said, next week, we're going to see people and some fund buying come in. So the question is, do we see a lot of selling into it? Do we see the Fed back up on its word as it did earlier this year and not taper? My guess is they're going to probably try to walk both lines, which is going to be a little bit of tapering, maybe not as much as they said, but that may still be enough to set a high in the market for a while and come back to the long-term mean, which is actually fairly high in this market. But there's always this last part, which is the blow-off phase. We've had some fairly decent blow-off tops. That's kind of on the short term. Now the question is whether or not do we have the return to normal next week and then selling. Maybe that return to normal takes all the way to the end of December. But if we don't get back up to the previous highs fairly too sweet, there is a problem in River City.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yeah, I couldn't think of it, but it was Chief Tin Bears. And but I think the real guy's name was what I said earlier. But yeah, one of the best written parts in a Western. But yeah, I always loved it when he said, there's iron in your words. Because he said, we either come here to live or we come here to die. But good movie. But yeah. I'm trying to, Dan, I want to say Chief Dan George is the other guy in that. I'm trying to remember the name of that guy, but I'll think of it another time. Anyway, keep a close eye on this, and that is what I'm thinking about next week. Let's go ahead and look at some charts and answer some questions. One of the questions was, you're pretty good at predicting when the market's going to go and do absolutely nothing. That kind of probably the most interesting thing in the last 5-6 years of me working with machine learning on a lot of this stuff is the thing it predicts the best is low volatility, and it can find it extremely well. But when I put everything in last night, it came out with a market that would be flat on the S&P. I don't try to predict the NASDAQ too much or the Dow or anything other than maybe the New York Stock Exchange or the S&P 500 because there's enough stocks in there. You can always get in the NASDAQ a handful of stocks that can move the 100 and moves the rest of it. And so I don't really think of it much as an index, as the tail that wags the dog. And that tail is always about 4 or 5 stocks. As we said, a bad day at BlackRock for another good Western, by the way, ADSK, with Autodesk taking a huge plunge off the right-hand side of the chart. What do I want to call that? Yeah, I don't want to do enough negative waves here, but it's truth. You don't want to do all that too much, but you do want to give it the losing horn. So Autodesk, like a lot of these companies, just falling out of bed, but there wasn't a lot of juice back up to the highs. These things look more like a trading range, but this one really just came back to a kind of a long-term gap. That gap actually popped back up after making a low back on March 8th of 2021, this year of our Lord. So you went through it. That only had like 1.6 million shares. You got 8.2 million shares now. So it just tells you how tough even the software business is that's not affected by some of these things. That does open up the next major low at 215.83. You may not get there, but you got plenty enough volume here today. As most people that follow Wyckoff and the disciples of Wyckoff, they would call this a selling climax, at least for the short term. So you're probably going to get a bounce of some kind. But selling climaxes generally have, if not 200% more volume than kind of the average, but somewhere around 200 to 500% average of the last couple of weeks. When you see that much volume, generally that means that everything just happened at once. And, sometimes you get sideways action. Sometimes you get a little bounce. And then you're going to go back and retest it. So even with this huge volume, the best you can hope for is a bounce and a retest on lighter volume and possibly then making a low. I remember Tim Ward always saying early on when I listened to him that a low is not a low unless it's been tested by lighter volume. And sage advice for not jumping on a hand grenade and sacrificing yourself and one for the team. But, you fell out of bed that hard, it's going to be very hard to get back. There's a lot of people, as Tom likes to say, everybody that bought this thing really back almost to November of 2020 is in a losing position now if they held. So not a good thing. And again, especially in the next few days, if you bought this thing and it's a loser and you've got some other stocks that are winners, and you sold them, you sell this, you negate the taxable gain for the year, and that may be part of it. So keep an eye on that. Actually not a bad company, but certainly down 16, 17% on the day for one of the sage leaders of the Golden Boys in Silicon Valley, a problematic issue. Back to what I've been saying about Best Buy, all these retailers, and the problems on the docks on the waterfront. Another good movie. Everyone's a reference to a movie today. Decent volume. Again, you might have some a selling climax here for the short, and that's why I'm thinking a lot of these things blew out the lows. But you're back through the double gaps for this that go back to January of this year. And, of course, the next gaps come in at about 16. But a lot of times, maybe you get a gap down. Maybe you get a bounce back up to 20, and then it starts working on it. But none of these look good. And, of course, another, probably the worst offender of the day is Nordstrom's. Again, retail sucketh, and not a real surprise that it does. This fell out of bed again. You're probably going to see, today, maybe whatever selling's in there, but it's going to be very hard to get a bounce again. If you've got the opportunity, you're on Wall Street, you got some winners and you sold them. Why hang on to Nordstrom? Go ahead and sell it, and at least you won't have to pay taxes on the winners because of hanging on and being a bag holder in Nordstrom's. But it didn't look good before. This thing went up to the previous gap down that it had 37 million shares. You got into it with about 6 million shares. So it never looked good. It never had a sign of strength. It never looked good. Anyway, 877-927-6648. Question, would I use the IEF as a good measure on the 10-year for the bonds? And you can, but generally the people I know that are really big into doing currency transactions, what they do is a difference between the 2 and 10. They're not so much caught on the individual rates as they're worried about yield inversion. And so they're always looking at the difference between the two. So most of those people I do see use charts, which will be like a 2 and a 5 and a 10-year. And they're not even looking at the rate so much as the difference between the yield and waiting for those things to come together. If they do, it's like crossing the streams in Ghostbusters. I got another movie reference in there today. You don't cross the streams.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
As we return, had a question. He says, Dave, you normally talk about a deal site that's really good for after Thanksgiving and Christmas about this time every year. I forgot which one it is, and it's called Slick Deals. Yeah, that's the one. Slickdeals.net. But if you're hanging around Thursday night wondering what the big Black Friday sales are, or trying to get a deal, or waiting till after Christmas to find whatever didn't sell. But, I love it. I keep an eye on it every day and take a look at it. But if you're buying gifts or checking out anything, probably one of the best websites for that kind of stuff. And since I'm always sitting around here watching the markets, you can keep an eye on it. But great gift ideas, a lot of stuff on huge sales. Man, I want one of these M12 stubby tool wrenches. Maybe someone will buy it for Christmas for me and send it to TFNN. Yeah, I like that. Everybody needs an Impact 3/8 Impact with a stubby. But what can I say? Maybe someone will hear me out there. No. But literally everything on this site gives you a good idea. Sometimes I've actually gotten trading ideas off this. When I see a company trying to blow everything out, I know things didn't sell well after Christmas, and I've shorted stocks based on that. I've also got a lot of trading equipment that I've needed, computer parts, standby power supplies, a lot of that stuff right after Christmas. But if you're looking for a good thing to keep an eye on Thursday night, Friday morning for all these Black Friday sales, slickdeals.net, not .com, .net. And I don't make any money off that. It's not a plug, but pretty neat. I got some more emails here coming through, but that's it. Okay, so let's take a quick look at some of the other standard usual suspects. We thought maybe we saw a blow-off top in Apple the other day. Certainly not coming back. The theme I'm going to continue on is the double repo pattern, where a lot of these stocks go up. Apple is not one that's done that. We've seen some of the others. But yeah, it certainly looks like a blow-off top to 165.70. I wouldn't be shorting Apple, but it may have topped out there like the rest. Some of these other ones, I'm busy writing an article now. You want to take a very close eye on. You've got to pop on AMD and a nice candle and some decent volume. Again, I'm not a big fan of this, but if this fails, everything else is. If AMD gets a cold, the rest of the tech sector will probably get a combination of COVID with a what do they call it? What do they call it? A dose? No. They always put a dollop. That's what it is. A dollop of whipped cream on top with a dollop of Ebola with COVID on top for advanced micro devices. So keep an eye on that. Any break probably below a 9-day over the next week or so without going back and tagging the top could be curtains for the rest of the market. Now, is it going to come back as bad as many of the others? No, but it could be problematic. I'm writing one of the reasons why they might have problems in the next week. They actually bouncing today on some numbers that says Intel's new chip is not selling very well. But there's also some kind of dark clouds in the future for both AMD and NVIDIA that will be in the Tech Insider coming out shortly after the show is over. NVIDIA never really gave it up the way that the rest. It's still the strongest, best house in a bad neighborhood. Volume's not all that exciting. And again, the weaker stocks are going to fail first. And of course, we saw, almost 7 days of horrible and just pathetic advanced decline lines in the market, with a handful of stocks like NVIDIA or AMD holding the rest up. Now that they've kind of come off a bit and on some decent volume, that may be enough to make sure that they can't carry the markets higher by themselves any longer and are going to need some help. Dollop. Make sure it's a dollop, not a dollop. I always thought it was a dollop. D-O-L-L-O-P, dollop. Just a dollop. It always says a dollop of whipped cream on top, doesn't it? 877-927-6648. It's been far too long since anybody's given me a call. I'm feeling like the Maytag repairman here. Give me a ring. Other things going on that I wanted to look at is the SMHs. Again, we're not having races back up to the top. Not that I thought I would. But you do have some troubling patterns coming up here. We did break below and did close below the 3x3 after the trend line. That tells you that if we do end up with a double repo pattern, the target would be back to about 255 in the market. And I don't think it would take much for China to fire some warning shots or actually do something and see 255 in the SMHs back in a heartbeat. So if I'm going to be long in any of this stuff, it's certainly going to be with calls and not with an equity. But at the same time, if I see this kind of go back up and over to maybe like 20 or 305 in the next few days and then pull back down and get a big candle, I suspect it's going to probably come off about as hard as Tesla did off the top. And again, we've had the first move off the top, and now we're going to probably see some kind of it's all okay through the next week. And the proof of the pudding's probably going to be next Wednesday by fund buying. So we're kind of looking at that going forward. Question about the Qs. Again, they've really already made the sell. And this is a double repo pattern already. One of the reasons why I'm not thinking that everything's copacetic in most of the leaders of the NASDAQ. And, of course, I talk about this, but I'll bring it up again for any new listeners. I ran across this in Joe DiNapoli's book. We cover it when we come back, wrap up the show. But a fairly bearish pattern out here. We haven't had any volume to the downside. We'll talk more about it as I return, just like MacArthur, to the Philippines.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we get ready to wrap up the day. And what do we got? We're up 5 points in the S&P. Yeah, it's hard to keep a bad market down after you've had a sell-off and everybody's been conditioned like Pavlov's dog. Does that ring a bell? To buy every time the market pulls back. Like I said, I'm not expecting a whole lot on Friday other than some sideways action. Remember, the cash is probably going to come in. It's probably not going to be spent until early afternoon on Monday. They'll mark up to the extent that they can for fund buying, which really kind of starts on Tuesday, Wednesday, maybe even extends into Thursday. But you see selling into that and past the first, then that's telling you that we've got a much bigger problem. But we shall see if it is just a passing phase, some tax selling, some remnants of Evergrande, which I've heard some people think that maybe some of the selling this week was that, people having to raise cash. We know that Jamie Dimon's been acting flaky for 2 weeks. Maybe they're losing a bunch of money. He went out and bowed to his communist masters last day, after saying that he thought that the big investment banks would outlast the Communist Party, and they slapped his hand for that. But what can you say? He's been acting a little flaky. So maybe there's some bigger problems. I've heard some problems with options and other things that they were underwriting in China might be coming up. So could we have another Lehman market where a moment or mini Lehman market moment with Goldman Sachs? You never know. It's kind of that like watching icebergs. You only see the top 10% of the risk. The lower 90% you never see. Sell when you can, not when you have to. We'll see you next Monday, maybe, if I make it back.